Bank of Canada back at it again for the 8th time in a row, and they increased the interest rate this time by 0.25, bringing the overnight rate to 4.5%. Now, the questions on everyone's mind is this it? Are we finally going to see a pause? Can it go higher? Will it go higher? Are we going to see rate cuts? We cover all of this and much more in the video. Happy Monday. My name is Vik. I'm a realtor here in Toronto in the GTA, and I help people buy and sell real estate. As always, I want to thank you for being here, watching, subscribing, liking, sharing, all that stuff. It really helps me out. Now, I have a goal for this channel, and the goal is to reach 100 subscribers by the end of February. And I can only reach that goal with your help. And those of you who have already been supporting me, again, I just want to reiterate, thank you. It really means the world to me. Thank you. If at any point during the video you have any questions about what we're talking about today, or you just want to talk about real estate in general, you can click the first link in the description and book a call with me. I also really want to hear from you. Leave your comments down below and let me know what you think about the recent Bank of Canada announcement and where things might go. Without further ado, let's jump into the video.
Our overriding message to Canadians is that the bank will be there to provide monetary stimulus for an extended period. Interest rates are very low and they're going to be there for a long time. If you've got a mortgage or if you're considering to make a major purchase, or you're a business and you're considering making an investment, you can be confident that interest rates will be low for a long time.
So that was Tiff Macklem back in 2020. He's the head of Bank of Canada, and he basically said they'll keep interest rates really low for a long time, but clearly that didn't happen. Now, I have to give you some background on overnight rates and how it affects mortgage rates. There's two types of mortgages that the overnight rate change affects. The first one is called a floating mortgage, or it's called an adjustable rate mortgage. And the second one is a variable rate mortgage. The main difference between these two products is the amortization change and the payment change. An adjustable rate mortgage or floating mortgage, as the overnight rate increases, so does your monthly payment. If it goes down, your payment goes down. But the amortization period does not change. So if you have a 25-year term mortgage, it's going to stay a 25-year term mortgage. If it's a 30-year, it's going to stay a 30-year. But the only thing that's affected is your monthly payment. Now, the second type of mortgage that I mentioned, which is the variable rate product, as the overnight rate increases, the payment doesn't necessarily change, but the amortization and the interest portion of your payment changes. So essentially, it is possible to be paying interest-only payments for your mortgage. Instead of your amortization going down like it's supposed to, it can actually stay the same or go up. Now, with this type of product, there's also something called a trigger rate that's attached to it. It's super important to know, because if you hit your trigger rate, you automatically have to start paying more in your monthly payment. The trigger rate is only hit when you have more owing on your mortgage than what you are paying due to your interest rates. Essentially, you're not covering your interest portion of your payment. So this is a really bad scenario, and pretty much everyone who's taken this type of variable mortgage in the last 3 years has already hit their trigger rate. All right, so now that you know a little bit about the mortgages and who's affected, how they're affected, let's get back to the Bank of Canada. So the latest Bank of Canada announcement last week on the 25th was probably one of the most positive ones we've had in a long time. With 8 interest rate hikes, we hadn't seen any signs of slowing down from the central bank, and we finally are seeing the light at the end of the tunnel. So at the last Bank of Canada meeting, Tiff Macklem came out and said that they're pausing rates, but it's only going to be a conditional pause.
With today's modest increase, we expect to pause rate hikes while we assess the impacts of the substantial monetary policy tightening already undertaken. To be clear, this is a conditional pause. It's conditional on economic developments evolving broadly in line with our NPR outlook. If we need to do more to get inflation to the 2% target, we will. We're trying to balance the risks of under and over tightening. If we do too little, the decline in inflation will stall before we get back to target. If we do too much, we will make the adjustment unnecessarily painful and undershoot our inflation target.
Now, if you watched the last video that I put out, I said that I don't see them stopping increases or cutting the rates anytime soon, and I'm still going to stick by that. This is only a conditional pause, and the more the numbers come out for inflation, there's a good chance that they're going to go up, right? And Tiff Macklem even said at the last meeting that they're not even thinking about cutting rates. They're only thinking about, have they done enough? So now it comes down to you. What should you do if you're making a purchase this year? First off, everyone's financial situation is different. Everyone's risk tolerance is different. Fixed mortgage rates right now are lower than variable rates. And I know a lot of people taking 2 to 3 year fixed mortgages hoping at the end of their term, the rates will be a lot better. Variable rates right now, in my opinion, are pretty risky because they're super high and have the chance of even going higher depending on the Bank of Canada. I also don't think they're gonna be cutting rates anytime soon. Another quick statistic to consider whether you're gonna go fixed or variable is that 6 out of 10 Canadians breaking their mortgage within 3.5 years. So that's 60% of Canadian mortgages that are not going the full 5-year term. Now, all of us want rates to come down. I want to go back to my 1.25 rate back in 2021, but we have to ask ourselves, what conditions need to be met for the rates to actually come down? This is the question that you have to ask your mortgage advisor next time you sit down with them. If the answer they give you is they can't stay high forever or it has to come down at some point, that's not good enough. They should be providing you context for where they see rates going and why, and based on that, you should be choosing whether to go fixed or variable. Now, I'm not a mortgage advisor, I'm not an economist, I'm just sharing my opinion and I'm sharing what I'm seeing on the ground level. Me personally, I don't see rates coming down for a while. And this is the one thing I'll be really happy to actually be wrong on. Seeing the central bank really be ambitious in the past, and in the short term, I just don't believe what they're saying right now, and I don't believe their projections. You guys just need to assess your own risk and make your decision based off that. And finally, let's touch base on prices. I still think they'll grind down for a bit, but the sentiment around real estate has definitely changed. This recent announcement, people are seeing that light at the end of the tunnel. I think the spring market will be the first test as to where the market might be heading this year. Now, if the bank cuts rates this year, if they cut them too fast, there's gonna be a jump in price. Every announcement moving forward that they don't increase the rates now, the sentiment is gonna change way more into a positive one than a negative one that we've been seeing already. So even though we've seen a shift in the sentiment this week, don't call it a comeback, right? Assess your risk, make the right decisions, and go from there. And that's the video for this week. Thank you so much for watching. I hope you learned something new. And if you did, please share the video with someone who can benefit from it as well. Make sure to like and subscribe. If you have any questions, click the first link in the description to book a call with me. Enjoy your Monday, and I'll see you in the next video.